President Obama has created this new financial crimes division of the DOJ. I'm interested in your take on how that might impact this proposed mortgage servicing standard settlement that's in discussions between states' attorneys general and the banks like yourself. Is that going to impact it? Because there's been some concern from other banking CEOs that it is.
You'd have to assume that the amount of dialogue that's going on around all this contemplated the types of things that you've been reading about. But let's back up on what's going on in the mortgage. We have to get through the mortgage for the good of the country and move forward. Everything that moves us forward is a good thing. And so we were trying to, with the group of big servicers and the administration and other people, to work cooperatively, and we'll continue to do that, and I'm sure we'll get somewhere. But the idea is you're trying to get to the other side so that you can start to move forward. So as delinquencies come down on portfolios, the number of modifications, we're over 1 million modifications completed. We're completing at a faster pace than we've ever completed them. Anything that helps move that forward is good. And so that's what we're trying to get focused on. The settlement, other things that we've done, all move forward. Some of the refinance programs are embedded in the settlement. Some of the refinance programs embedded in the President's State of the Union address. All these are elements to move this forward. If the more we move it forward, the better off we are. So we're in favor of moving forward, and I don't think much changed, honestly, with all this.
$335 million settlement with the DOJ earlier, I guess late last year, over Countrywide's practices between 2004 2008 over discriminatory lending practices. Is this nearing the end of the bleeding from Countrywide for Bank of America, or do you have any way, Brian, to quantify the losses? Because there are some that say you can't calculate it at this time, and they're very worried about what's ahead for the bank.
I think that those that really know the financial matters know that we built substantial reserves, $16 billion of reserves for the putback risk and more reserves on top of that. And so the settlement was really Countrywide activities took place several years ago, and you can go to trial and you can fight things out and all that stuff. But the reality was we have to move people forward. So the settlement was the best interest of the company. It was the best interest of the government. We've done it. It's a company that it was activities conducted before we owned and we're behind it. But we've done a lot of work to put certainty to the mortgage business, and you're seeing that reflected in the market. But the reality is it all comes down to one thing, which is continuing to clean up and get through the excesses of the mid-2000s, and that's what we're all working on.
On that point, would you consider putting BofA's mortgage business, which is largely from Countrywide, into bankruptcy? It's something that Dick Bove suggested, and I found pretty interesting. Is that even on your mind?
It's an option that we've told people we have, and we make the judgment what's best for our shareholders every day, and sometimes people have everybody has their opinion about everything. It's never as simple as people think, but we have that option.
You've sold some 20 non-core assets, right? Billions of dollars. Are there more assets for sale on the table? Is Merrill on the table, for instance?
No.
Absolutely not.
Absolutely not. When we started off a couple of years ago, we'd done 6 acquisitions in 6 years, brought in 200,000 people through those acquisitions. We have 285,000 people. Yep. So now, to give you a sense of scale and size and change. So my job is to take that franchise, which in it is the best franchise in the world, and the best capabilities for our customers in the world, and make it more simple, more straightforward, and take everything and put it that. That's what we've been doing. So over the last 8 or 9 quarters, you've seen us sell our interest in some foreign banks, strategic stakes which no longer were needed. The Canadian card business, again, great company. We sold to another great company, but for us, it wasn't core to what our customers do. So what we've done is simplify our franchise, made it more straightforward. We have 3 groups of customers: people, companies, institutional investors. We provide the 4 or 5 core products they need. Our capabilities are market leading in every area, and nobody's ever had that before. It's taken us 230 years to put together this franchise. And so from now, for the next 200 years, our job is to do a great job for customers and integrate that. So we've kind of gotten rid of the stuff that didn't fit, for lack of a better term. We built the capital, built the liquidity. We have made money in most of the quarters. The issues, and we put up a lot for the mortgage. Now the question is just to drive that going forward. Much more simple company, much more straightforward company, and a company that has the innovation, frankly, to drive this industry to places it's never been. And that's because it was fundamentally you couldn't do this until the last 20 years.